Let's go back.
Before on Basel III on non-bank financial institutions. However, he said it is that is to say that the Collins Amendment does require that generally applicable capital requirements be applied to all of the holding companies we supervise. I look at the Collins Amendment, and what concerns me is that I'm afraid your hands may be tied, in that we have two different types of financial institutions here. We have the short-term funding in the banks, and we have the long-term in insurance companies, and yet we're going to give risk-based capital requirements, expanded requirements based on general accepted accounting principles, which don't apply to insurance companies. We're going to increase the cost of insurance. And I come from a state where insurance is very important in Florida. And more importantly, we're going to probably result in a conflict between the McCarran-Ferguson Act and the implementation of a Basel III capital requirement for insurance companies. How do you feel that we can resolve that, or can we resolve that?
Sophie, on the debt limit, I wasn't trying to make a policy recommendation other than to say that the last time around we did get a pretty big shock to consumer sentiment, and it was harmful to the economy. So I just hope that whatever is done, that it's done in a way that is confidence-inspiring. On insurance companies, we're going to do our best to tailor our consolidated supervision to insurance companies, but I agree with you that the Collins Amendment does put some tough restrictions that we're going to have.
Agree that we would have to legislate in order to give you, in other words.
Yes.
Thank you. Because I think that what we're at is, and one of the reasons for the delay is that you can't put the capital requirements that are as the minimum for banks as the minimum level capital requirements for insurance companies. As was pointed out yesterday in a Wall Street Journal opinion article, you're going to see the insurance companies that are now going to be held to a higher capital standard go more short-term debt, and now all of a sudden they may enter the banking business, which is going to be counterproductive to where we want to go with the correction that we're trying to do. So my question to you, I guess, as a result is that if we impose these the bank-centric capital requirements on insurance companies, would that have done anything to have saved AIG from its financial collapse of 5 years ago?
Well, there are a lot of things that AIG was doing that it couldn't do now. Let's put it that way. On the Collins Amendment, it does make it more difficult for us because it imposes, as you say, bank-style capital requirements on insurance companies. There are some things we can do, but it is providing some.
Would it be safe to say in my last 20 seconds that the future is not too bright for the non-bank financial institutions in terms of having any reduction in their capital requirements?
Well, there are some assets that insurance companies hold that we can differentially weight, for example. There's some things we can do, but I think this does pose some difficulty for our oversight.
Thank you, and thank you again for your service.
Okay, he's answering a question.